in partnership with CommSec.
So, a new working week begins. Tom Piotrowski over at CommSec. Hello to you, Thomas. So how are we shaping up today?
Oh, Pete, I suppose it's slightly underwhelming in that we're expecting a fairly flat start, but we saw record highs being scaled by US markets on Friday. But I suppose equally encouraging is the fact that in the year to June, we've seen the ASX 200 improve by 9.6% in that 12-month period. So that's the best outcome in around 4 years. So a mixed set of results, I suppose. But what we're seeing in the Northern Hemisphere at the moment is the fact that there is a growing consensus that interest rates are going to be falling in the near to medium term. That was a factor propelling the S&P 500 and NASDAQ to record highs on Friday. The US Treasury Secretary, Scott Bessent, said that progress was being made with China in relation to trade. That was another important outcome. So at the end of the day, you had the S&P 500 and the NASDAQ each up by around 0.5% in weekly terms, up by 3.4% for the S&P 500 and up by 4.8% for the NASDAQ. So quite a confluence of positives there, Pete. So as far as the local picture is concerned today, as I said, the future's pointing to only a flat start. We'll be looking forward to some important manufacturing numbers out of China today, which will give us a sense of how that economy is going. We've seen the Aussie dollar consolidate above 65 US cents thanks to a moderating greenback. That's on the back of the prospect of lower interest rates and indeed the moderating growth pulse that we're seeing in the US at the moment. So the local currency is trading at 65.3 US cents.